Hello everyone, my name is Safie bin Killih. Today I will explain about which stock that I choose for my portfolio. So first, for my stock that I choose is I will choose McDonald Corporation, which is from the GIA market. This is because McDonald Corporation price is high, which is $163.43. Moreover, if we invest in the stock that have a high price, we will get a higher return. But keep in mind that higher the returns means that higher the risk. Other than that, I choose this stock because McDonald Corporation has a big amount of market capital, which is 130.04774 billion. That's a lot of amount. So McDonald Corporation price per earning is high, which is $28.75. Moreover, McDonald Corporation had better performance compared to the other stock because this stock had the highest return on asset, return on equity, and return on invested capital. So, I will explain a bit about the company description or the company overview. So, McDonald Corporation engaged in the operation and franchise of McDonald's restaurants. It operates through the following segment, which is the US segment, the international lead segment, high growth market segment, and the foundational market and corporate segment. So the first segment, which is the US segment, managed to increase customer awareness for its global mobile application, mobile order and pay functionality, and delivery platform. The second is the international lead market segment, focused in expanding the McCafe coffee brand and the ongoing deployment of electro-optical transfer function restaurant across the segment. And the third one, the high growth market segment, involved in the ideas around design, digital, people, menu innovation, and value from other markets to enhance the customer experience. So for the last one, the foundational markets and corporate segment refers commitment to run great restaurants and increase convenience to customer, including drive-thru and delivery. So for the last one, I will explain about the risk factor of the stock that I have chosen. So there are two factors for this stock, which is the first one is McDonald Corporation investment to enhance the customer experience, including through technology, may not generate the expected returns. And for the second one, if McDonald Corporation does not anticipate and address evolving consumer preferences, McDonald's business could have suffered. So that's all from me. Thank you.
Hello, my name is Felix. Today I will talk about Micron stock from S&P 500 market. The characteristic of this stock is currently their profit margin is continuing to rise and now at 38.7%, which means a good indicator for this stock. Secondly, the demand for the product is keep increasing. Thus, it will help this stock to become recognizable at the market and will become the choice of investor. And lastly, the Micron technology is now evaluating an additional opportunity to drive its deleveraging, and hence it will be promising a higher rate of return to its investor. And we will Okay, now let's move to the risk that will be faced by the Micron technology. The first risk is the Micron technology will be unable to maintain or improve their net profit margin. This is because they are dependent upon continuing decrease in per gigabit manufacturing cost, so that in the future they may be unable to reduce per gigabit manufacturing cost. Secondly, the high competition in the semiconductor, memory and storage market from numerous companies such as Intel and Toshiba Corporation, because some of these company is a large corporation and conglomerate that has a greater resources to invest in technology. The competitive nature will be affected. The Micron thus will be result in the financial costs. And the last risk will be the economic downturn. This is because it will be affected the demand for their product that incorporated in their production, such as personal computer and mobile devices. The reduced demand will be affected the average selling price and product sales.
Hello, my name is Asyraf. Today I will choose Analog Device Incorporated from S&P 500 market. Okay. This is because I am confident with the stock from the market S&P 500. Previously, it shows an upward trend, but for now the market is on bearish trend. I'm sorry. Also, the market is in downtrend, but Analog Device is keep on stable at the top gainer in S&P 500 market. Analog price is at $93.11. It's cheap, but does not mean that I will not get more income. I believe that if I buy at the lowest price, I can get an income when the price is going up. So I will get a higher return. For the price per earning for Analog Device Incorporated is also high at $49.96. In a nutshell, Analog Device Incorporated has a better performance than any other stock at the S&P 500 market, and it is one of the top gainers in the S&P 500 market. Furthermore, Analog Device, which is registered in Nasdaq as ADI, is a world leader in design, manufacture, and marketing of broad portfolio of high-performance analog, mixed signal, and digital signal processing, integrated circuits used in virtually all types of electronic equipment. Analog Device have focused on solving the engineering challenges associated with signal processing in electronic equipment. For the risk factor of the stock is disruption in global credit and financial market could materially and adversely affect the business in Analog Device and result of operation. Secondly, budgetary troubles experienced by the analog providers or wholesaler could bring about item delay, expanded records, receiver defaults, and stock difficulties. And finally, noteworthy interruption to worldwide credit and money-related markets may likewise antagonistically influence the analog device capacity to get to other financing source on satisfactory terms. That's all for me. Thank you. This is Analog Device.
Hello, my name is Safwan bin Bakar. I'm from G19. So for the stock that I have chosen is Broadcom Incorporation or Avago. It is because the company plays a huge role in producing semiconductor products for many technologies. The company also has a large market capitalization, which means the company is stable and strong. The company is put under S&P 500 market, that is the Standard & Poor 500, known as the leading indicator of the performance of large cap market with an index of 505 stocks issued by 500 largest companies. Broadcom Incorporation, or formerly known as Avago Technologies, is a designer, developer, and global supplier of products based on analog and digital semiconductor technologies. The company was founded in 1961 as a semiconductor product division of Hewlett-Packard. The division separated from Hewlett-Packard as part of Agilent Technologies in 1999. Broadcom provides a broad range of digital and analog semiconductor connectivity solutions that serve four primary end markets: wired infrastructure, wireless communications, enterprise storage, and industrial and others. Common applications for its products include data center networking, home connectivity, broadband access, telecommunication equipment, smartphone, and base station. So the risk factor for Avago or Broadcom Incorporation is its exposure to Apple. Avago admits that aggregate sales to Apple accounted for more than 20% of its 2015 sales. Meanwhile, Broadcom depended on Apple for 14% of its 2014 sales. Therefore, merging with Broadcom won't really diversify Avago business away from Apple. Last quarter, Apple's iPhone shipments only rose 0.4% annually. iPad shipments plunged 25% and the company warned that its second quarter sales could fall as much as 14%. Those bleak numbers drag down many of Apple's top suppliers. Next is a small number of competitive markets. Avago also admits that the company is dependent on a small number of markets and dynamics in these markets could negatively impact their business or result of operations. Avago said that a substantial portion of their revenue is generated from sales of products for use in mobile handsets, particularly their film bulk acoustic resonator filter products, the market for which is growing and becoming increasingly competitive and volatile. So that's all for me. Thank you.
Hello everyone, I'm Veloo from GA31203. In my opinion, I will choose Safwan Corporation from DJIA market will give more return within next 1 month. This is because the Safwan Corporation price is $119.26 and will get a high return within next 1 month. If I invest in the stock that I have high price, soon I will get a high return in the short term. At the same time, I will be alert that higher the return, higher the risk. Moreover, I will choose this stock because Safwan Corporation don't has market capital, but Safwan Corporation's price per earning is $24.51 and price per sales is $1.68. Other than that, Safwan Corporation has better performance compared to the other stocks because these stocks has the highest return on assets, return on equity and return on invested capital. It shows how efficient Safwan Corporation management is at using its assets generate earnings. The higher the return on assets, the higher, the better the Safwan Corporation is earning more money on less investment. Safwan Corporation is a worldwide vitality organization and its working and monetary outcomes are reliable to an assortment of dangerous natural in the worldwide oil, gas and petrochemical organizations. A considerable lot of these dangers are not inside the organization's control and could tangibly affect the organization's consequences of tasks and money-related conditions. The main risk factor of the Safwan Corporation is the scope of Safwan's business will decline if the company does not successfully develop resources. The organization is an extractive business, subsequently one on the chart of charts that isn't fruitful in supplanting the raw petroleum and gases petrol it produces with great prospects for future natural openings, or through acquisitions the organization business will decay. Making and keeping up a stock of ventures relies upon numerous variables including getting and re-establishing rights to investigate, create and deliver hydrocarbons, penetrating achievement, supply, advancement, capacity to bring long lead time, capital concentrated, undertakings to finish on the spending plan and on the plan and productive and gainful activity.